Hello, everyone. Welcome to today's webinar. This is part 3 of this 8-part webinar course that is designed to support financial advisors as they have more constructive and informed dialogue with their clients when it comes to cryptocurrencies, blockchain, and digital asset investment opportunities. I'm your moderator, Dara Albright, co-founder of D-Wealth Education, a new educational division of Digital Wealth News. And we're dedicated to providing incentivized learning to financial professionals, business executives, and modern-day investors. Today's session will provide an important introduction into the world of cryptocurrency investing. So whether you're a seasoned crypto investor or a novice, you are really going to benefit from today's session. Today's distinguished presenter is Jahan Jamali, CMO and co-founder of Saron Funds. Jahan, as many of you already know, is a former intelligence officer and leading expert on emerging technologies, global risk management, and international relations. He is a renowned cryptocurrency educator and is routinely sought by the media to talk about the intersection of cryptocurrency, blockchain technology, and security. Before I hand over the mic, just a couple of items I just want to get out there. First, the webinar will last an hour. There'll be 50 minutes of presentation time and about 10 minutes for Q&A. Q&A is reserved for the very end of the presentation, but you are welcome to type in any questions that you may have in the public chat. Just know that we won't be answering them to the very end. We do try and get to all the questions, but if time runs out, we are happy to follow up with everyone offline. A couple of items just on the public chat. If you can, please put a question mark next to your question. That helps us distinguish between a comment and a question and makes it easier as we sort through that. Also, please reserve the public chat just for questions or insights that are relevant to the discussion here. No advertisements or anything like that in the public chat. This is just all for this conversation here. Also, as a reminder, Investments and Wealth Institute has accepted this webinar for 1 hour of CE credit towards the CIMA, CPWA, CIMC, and RMA certifications. Now, regardless of whether you have one of those or not, everyone who completes the entire 8-part program will earn a Level 1 Crypto Advisor certification from Saron Funds that demonstrates cryptocurrency and digital asset expertise. The completion certificate will be issued at the end of the course as a non-fungible token, an NFT. This is an industry first and something we are incredibly excited about. And with that, I'm going to hand the mic over to Jahan.
Well, thanks very much, Dara, and welcome back, everybody. For those of you that had been on the previous sessions, it's great to see you again. Thank you very much for coming on and continuing on this educational journey. For those of you that this is their first session, welcome, and hopefully you get some time to catch up and take a look at the pre-recordings from our first 2 sessions. But either way, I designed these to be able to stand alone, and it will. I think you'll definitely find it worthwhile. Now, I do want to go over and give you a couple caveats as I've done before. We've designed this from the top down, so there's a wide variety of levels of cryptocurrency knowledge and expertise in our audience. And I've designed this in a way that is both accessible to the newcomer as well as can maybe fill in some gaps for those of you that are a bit more exposed or have a bit more experience with cryptocurrencies and digital assets. So for everybody, there's going to be some great takeaways from this. The topic of today's is going to be an intro to investing in cryptocurrencies. And this is will be followed up in session 4 with a bit more in-depth on investing. So today's going to be more of an overview and some insights into the very basics of cryptocurrency investing and transacting, and the mechanics involved. And what we're going to talk about first is we're going to talk about wallets. Right? Everybody's heard of cryptocurrency wallets, and I can assure you that it's not one of these things that you keep in your back pocket. But we're going to talk about what a wallet is and how a wallet works. We're going to talk about hot and cold wallets. For those of you that have been reading about cryptocurrencies, I'm sure you've come across those terms in the past. I'm going to explain to you what exactly that means and what the pros and cons of a hot wallet versus a cold wallet are. We're also going to talk about the different wallet types. Hot and cold wallets can fit into a couple core categories, but we're going to talk about the different ways in which you can have a cryptocurrency wallet. We're going to talk about some security considerations. Now, later on in our course, later on in the course load, and a few sessions ahead of now, we're going to talk about safety and security when it comes to cryptocurrency investing. And we're going to go over that more in depth, but I want to give you a little bit of insight and a sneak preview into that today. We're also going to talk about beyond the wallet, beyond just personal investing, right? In order for you as a financial professional to start to understand cryptocurrency investing, you do need to understand how somebody would do it on their own. Just like, you need to know how somebody would open a bank account if they wanted to open a checking account or a savings account before you can go and talk to them about different, covered call strategies or other types of investment vehicles. So this is, we're going to go over different ways to get exposure beyond just, having your own personal cryptocurrency wallet. We're going to talk about exchanges, and I'm going to go over the different kinds of exchanges that exist and some of the things that you should be looking into and considering if you're going to be keeping some of your cryptocurrencies on an exchange. We're also going to talk about active and passive management. We're not going to talk about any product in specific with that, but we're going to talk about at a high level. What's the difference between active management and passive management in cryptocurrency? And, cryptocurrency for a lot of folks, this is almost like a new dawn and maybe considering active management because the space is growing so quickly. And there's so much change happening, not only with digital assets, but, across the board in finance. So why don't we kick on right into it? I have a few, the number of slides here are a little bit less than the previous sessions, but they're a bit more in depth. So if you got questions, please feel free to drop them in the chat. And, don't worry if you hadn't, like I said before, if you hadn't been on the first two sessions, the recordings of those are available, and Dara will be able to provide you the link to that in our follow-up email. But let's get right into it. What is a cryptocurrency wallet? Well, what I have there on the top right is some of the core components of a cryptocurrency wallet. So a wallet is it stores your public and your private keys. And those keys are unique to you and unique to that wallet. And the keys allow you to manage your cryptocurrencies. And what they effectively do is provide a digital signature that authorizes transactions. Now, a wallet can be a device, a physical device. It can be a program that you've downloaded either on your phone or on your desktop, or it can be a website that you've logged into and started an account with, or a service offered by an exchange that you have an account with. And wallets come in a variety of different capabilities. Some wallets support multiple cryptocurrencies, but they all at least support one. And it's up to you and your preferences to decide, when you're looking at wallets, whether it's, you're going to hold a variety of different cryptocurrencies or one in particular. Now let's talk about your keys for a second. So what I have there on the top right, that is a public key. And that is the way in which you would receive funds. If somebody was going to send you cryptocurrency, and you would give them your cryptocurrency wallet depending on the crypto that you wanted. And each cryptocurrency, just want to make it clear for everybody, has a different address type. So you cannot send someone Bitcoin by sending them Ethereum. It doesn't work that way. All right, so that's one thing to definitely to consider. And Bitcoin Cash is different than Bitcoin, so know what kind you're sending. Sometimes, most of the time, the wallet you're using won't allow that transaction to go through. But you do want to make sure that you're not sending Ethereum to a Bitcoin address. It's just not going to work. And now that QR code that's on there, that's a scannable QR code, and a lot of cryptocurrency wallets have that. That has your public address built right into the code there. So, you would enable your camera, you can scan that, and that would populate the address, almost like, a regular barcode reader would. So the difference really between public and private keys, your public key is going to be available and you can see it, and that's what you're going to send people when you want to receive money. Now, your private keys, those are a bit different. Those are on the other side and are walled off, and those authenticate your ownership of the asset, and they encrypt the wallet. So while your public address is something that you might want to share with folks so you can receive funds, and transact, your private key is definitely not something you want to be sharing. So I want you to kind of wrap your head around this to a degree. If you want to think about it kind of in like banking terms. Crypto is not like a cryptocurrency wallet isn't a wallet that's you necessarily keep in your back pocket. You want to think about it as a digital safe deposit box. All right. Now, the whole thing about cryptocurrencies for the most part is that you are, in control. There's no third-party bank in between. So you're really the bank in this case, right? So a good analogy is you want to think of your wallet like your bank's platform. Your address, your public key address is like your account number, all right? Your account and your routing number all tied into one. Your private key would be like your PIN or be like the keys to the vault. Now, that's, again, something that I really want to stress. I'll stress again like 1,000 times, so not 1,000, but quite a few times over the course of this. That's, you want to protect your private keys. You don't want to have those exposed or kept anywhere that's not safe. One of the things I do want to point out, so your wallet itself does not hold the cryptocurrency, right? As we talked about in the previous session, all of that is stored on the blockchain. What the wallet has is your access to it. So your private key assigns you the ownership and verifies the ownership, and your public key allows you to transact with it. But all the assets are stored on the blockchain. Your wallet is the pathway to that. So think of the blockchain itself as the bank's vault, and your private key is your pathway and your ability to verify ownership to that piece of the blockchain of which you have ownership. All right. Now let's talk about hot and cold wallets. And like I said before, I'm sure you guys have heard this terminology before. Easiest way to think about this is a hot wallet is connected to the internet somehow. Now, a hot wallet could be a wallet that's hosted by an exchange or online, but it has an active internet connection. And there's a variety of different apps that you could use that are effectively hot wallets, and they are much more user friendly than a cold storage wallet. And often they're hosted by a third party. So whether it be an exchange or the service that you're using, a hot wallet has a bit more usability in its ability to transact easily and more frequently. Now, one of the things to consider is that like any other web service, they can be, compared to a cold storage wallet, vulnerable to a hack. Not that the blockchain is going to be hacked, right? But maybe the service provider. This is why it's important to do due diligence on the wallets you use. Maybe they run into a security issue. But oftentimes verified exchanges have insurance policies and safety measures in place. Cold storage wallets are offline, and those can be only accessed through a physical device. So I'm going to talk about some of the types of the physical devices that are out there for a cold storage wallet. Cold storage wallets are, the transactions can be a bit more cumbersome, right? Because there's a few mechanics that, stand in the middle between the cold storage wallet that's offline and you being able to send and transmit that. It's highly secure so long as you keep the actual device in a safe place. And you're not going to run into any issues with hacking per se, as long as you, again, keep your cold storage wallet somewhere safe. However, like I said, it's not as easily usable, and it's more geared towards a long-term storage, rather than daily transactions. Now, I do see a question. I'll answer it now. So yes, Coinbase is a hosted wallet. Just to answer that question, I saw it come up on the chat. So Coinbase is a hot wallet, and I'll get into that a little bit more because we do talk about Coinbase in a couple slides up. Now let's go into the different types of wallets that kind of fit into the categories of hot or cold. So there are software wallets, and most software wallets are hot wallets. I say most, and because there are some cold devices out there that have cold storage but have interconnectivity with with their app, so that you can move it. You can move over to a hot storage when you're looking to transact. Now there are web wallets, and these would be wallets that you would sign up an account with a web browser. You don't have to download anything special, and with a web wallet, your private keys are locked away and hosted partially, if not wholly, by the wallet provider. So that's why it's really important when you're doing your due diligence to, if you're going to use a web-based wallet, to do your due diligence and your research, making sure that they're a credible and reputable institution and organization. Now there are desktop wallets too, I'll give you an example. Metamask is one. It's also a mobile wallet, but it requires you to download an application, and that application can live as an extension in your browser, or it can live as an actual application that's downloaded onto your device. And there are mobile wallets. There are wallets that are designed predominantly for mobile use. Abra is one that I have and that I like a lot. I have a lot of crypto wallets. I'm gonna like to try them out. But these are more designed for transactability. They often come sort of with a QR code baked right on top of your address on the screen to make it easy for you to scan or to send and transact with your crypto a bit more easily. Hardware wallets. All right, so hardware wallets, these are your cold storage wallets. And these are actually on a physical device. And for most of them out there, they look like a thumb drive. And each one has a variety of different security measures and elements built into it depending on the wallet provider. And they can easily either be plugged in into your computer when you're looking to transact or view, or synced up with another device when you're looking to see what your balances are. My favorite type of I say this tongue in cheek, my favorite type of cold storage wallet is the paper wallet. And yes, they do exist. I don't really recommend folks having a paper wallet because if you lose the paper, you lose your private keys. But they do exist, and it is a type of cold storage wallet, and I've seen them. I've actually had a few before. On a paper wallet, the dock itself will contain everything about your wallet, your private key and your public key. The problem from a transactability standpoint is you can't send the amount partially off of a paper wallet. In order to take your crypto off a paper wallet, you have to send the whole amount. So, if you do run into that, that's just obviously a large consideration. You have to scrape it all off there's a few wallets that do this, that'll do a swipe, and you can move it on to into a different type of storage, either a hardware device storage wallet or a hot wallet that you either have a account with online or that you've downloaded as an app. So, things to consider. You don't have to go all in on one or the other. It really depends on what you want to use different types of cryptocurrencies for. Hot wallets by far are much more convenient, and I have a feeling that the majority of folks that use and transact with cryptocurrencies will do so with a hot wallet. And your cold storage wallet would be think about your bank, right? You take your assets in a bank. You have your debit card, and that's the stuff you transact with. Now, your savings or precious valuables might be locked away in a safe deposit box somewhere in that same bank. And that's stuff that you're just going to leave and hold. Same thing with cryptos. You're going to have, cryptocurrencies that you want to transact with, and you might keep those on a hot wallet. But you might have some that you just want to store away safely that's a little bit more difficult to get to and, more secure in terms of like web connectivity, and you might keep some of that in a cold storage wallet. Now, again, your private keys are your crypto. There's a saying in the crypto community: not your keys, not your crypto. Right? Never share your private keys with anyone. There's a recovery phrase on a lot of wallets out there. That is your ability to restart your wallet if you need to. It's called your secret recovery phrase. On Metamask in particular, and I use Metamask a lot. Sorry, I buy my NFTs. You get a recovery phrase when you start your account, and you can view your recovery phrase when you log in. But that is it's usually, I think it's 16 numbers, 16 words, very specific words that have to be in a very specific order. You want to write those down, or you want to store those safely. And because if you ever have an issue where your phone gets a virus or something happens where you lose the app or need to recover your wallet somehow, you're going to need that recovery phrase. So a couple things that you really need to take away from this slide is protect your private keys if you have a cold storage wallet. And if you have a recovery phrase, you need to keep that somewhere safe. All right. Hopefully this is not too intimidating. This is just like you keeping your PIN safe and your debit card and your credit card numbers safe. You don't go around flashing those. Same thing here. So these are basic security things. Don't keep them in your email, right? I mean, what if your email gets hacked? It's the same thing as saying like you would keep your credit card number stored away in an email somewhere. You would never do that. So you shouldn't do that with cryptocurrency either. It's the same security mindset that you need to have. So just, if you're gonna take the responsibility and not want to deal with the bank all the time in the middle, then these are some of the basic security measures that you're going to have to employ. So it kind of comes with the territory. Some other wallet best practices. I think it's a good practice to separate your funds. Don't keep all your crypto in one place. I know you don't keep all your cash in one place. It's the same thing here, right? So it's not a bad idea. Have an exchange wallet or a hot wallet. Have a cold storage wallet. That way you can spread some things out, and it also diversifies your risk a little bit. Another thing too is you want to have two-factor authentication, at least two-factor authentication. There are some technologies out there now of three-factor identification, authentication. That's really important. So if you have a crypto wallet, get Google Authenticator. You guys use it now, I'm sure, for a variety of different apps you use at work. Or get a YubiKey, which is another authentication device. The one thing I would avoid is having your two-factor authentication be via text. I'll tell you why. SIM swaps. If you guys have never heard of a SIM swap, this is where the SIM card information of your phone has been compromised. And that, if it has been compromised, somebody can utilize that SIM information and, effectively take command of your phone number. That happened to me, believe it or not, a year ago. It's kind of one of the pitfalls of being a visible cryptocurrency investor. That there was an AT&T employee somewhere that was scouring for crypto folks that maybe had an AT&T number. And it was the subject of a federal investigation. There was an indictment here by the Justice Department right after that. But I had a SIM swap issue, and somebody took control over my SIM card. Luckily, I have I use my two-factor authentication with Google Authenticator, and there was nothing that was going into my text. So that was a quick trip to AT&T to get that resolved. And then lo and behold, a week later, I saw there was a Justice Department indictment here in Boston. So make sure that you have your two-factor authentication set up, and have it set up in a way that's not via text. So like Google Authenticator is the easiest way to do it. If you want to get even more secure, you can go get a YubiKey device. They're pretty cheap online. You can find it on Amazon for I think less than $50. All right, getting beyond the wallet. And I do see, I do want to see if you guys get a chance, answer the poll questions that are coming through. I want to get a good idea of where you guys are at so that I can help tailor, tailor the rest of the discussion. And it looks like so far the majority of you do have a cryptocurrency or a digital wallet, which is good. And to answer a previous question I saw pop up, yes, you can have more than one paper wallet. You can have as many addresses as you want. Each wallet's paper wallet's going to be its own address. So good. It looks like we have most of the folks here actually have a digital wallet. So hopefully this is just filling in some gaps for you folks. For those that don't, hopefully this is getting you up to speed. But there's a variety of different ways beyond just having your own personal crypto accounts of getting crypto exposure, and I want to walk through them. There are cryptocurrency exchanges, right? Like Coinbase is the one I'm sure everybody knows, and that's would be a hot wallet, and Coinbase is also publicly traded. There's other exchanges too, like Binance, the world's biggest, and Gemini, which is also Coinbase along with Gemini are based here in the United States. I'm sure you guys want to talk about Robinhood. Robinhood's great. I love Robinhood. Robinhood, I feel, brought cryptocurrency adoption and investing adoption to a new younger generation of Americans. As a matter of fact, a little caveat, one of the features I thought was really neat, but of course it got shut down, was early on when Robinhood first started on the cryptocurrency trading screen, which first of all, the crypto trading screens are all neon. There was a live chat on each crypto asset, which got kind of out of hand. But I thought that was a really interesting feature. I was fascinated by it. But Robinhood, you don't have the crypto. Now, they are coming out with a crypto wallet soon, or at least they've been saying that for the last year and a half. But when you're trading crypto on Robinhood, you're trading against the cryptocurrency. It's not the crypto itself. You can't send me crypto from your Robinhood account. You have to sell it back into cash and then withdraw it back out of cash. So you're trading against the digital asset. You're not actually holding it. And there's a couple intermediaries in there. So like the Robinhood folks after their IPO have been talking, even more fervently due to consumer demand about coming up with their own crypto wallet. At some point, I assume it'll happen. But if you're trading crypto with Robinhood, that's great. I'm glad you are. However, you're not actually holding the crypto and you can't actually send it anywhere. So just keep that in mind. And of course, when you sell it at a gain, you're going to have a tax implication. So food for thought on that. Now, the self-custody solutions. So these would be like your cold storage wallet. Now, some of these have interoperability with, with an app. So maybe you can kind of consider those like a warm wallet solution, maybe somewhere in the middle. And some of the ones out there that I like are the Trezor, the Ledger Nano X is fantastic. There's a lot of different cryptocurrencies that are supported. And like I said before, some of these wallets support one crypto, some support like a handful, some support a lot. Ledger Nano X, I happen to like. I use it as well. That's my cold storage wallet solution. The Exodus as well is another great one. It has great customer support and tech support as well. That's always important to look for. You're not going to get tech support with a paper wallet, but you will get it with Exodus or Ledger. And one that I happen to really like is called Arculus. And Arculus is it's a product that just got launched by a company called CompoSecure. And CompoSecure is in the process of being acquired by a SPAC that focuses on digital assets called Roman DBDR. And CompoSecure, their company makes the hardware for premium credit cards. So so the Arculus wallet is actually looks like a credit card, but it's a cold storage credit card. And it has 3-factor authentication, which I think is fantastic. It has to be close to the app that corresponds to it. So there's an app that goes along with it on your phone. It also exchanges back into fiat, so it exchanges back into the US dollars. But you have to have authentication in 3 different ways, not only having it there close to your phone, which has the app, but it also has to be in your hand, right? And it has biometrics as well. And there's a variety of different security mechanisms that are built onto that I think are fantastic. So I think that's a good, easy way for a lot of boomers to get involved in having a cold storage wallet solution, because I'm going to hand my dad a thumb drive. He's going to look at me like I got 2 heads. But if I hand him something that looks like a premium credit card and tell him it's a crypto cold storage wallet, he might actually use it. So there's a variety of different ways in which these devices are starting to emerge in terms of your self-custody solutions. Now, there's also cryptocurrency investment products. And I'm sure you guys are well aware of Grayscale's the GBTC. Now, Grayscale has more Bitcoin than anybody. And they have a variety of other different products as well that are beyond just Bitcoin. But it's a grantor trust structure. So you're not actually holding the Bitcoin itself, but you are getting exposure. But the caveat with that is that it has a fluctuating premium. So you're paying a little bit more often, not always. Sometimes it's less, sometimes it's at a discount, depending on on Bitcoin's price action. Now, I have, in my personal opinion, think that it's been a fantastic way to start to get institutional Wall Street accustomed to the concept of digital assets and accustomed to Bitcoin. However, I don't know how long that product structure is going to last. Because there are more and more private placement products coming about, hedge funds, LPs that offer a variety of different types of strategies, anywhere from a large cap or a large coin type of strategy, or to one that maybe is a yield producing. But there's a variety of different types of private placements that are coming as well. The only caveat with the private placements is most of them are restricted to accredited investors. However, at some point soon, and knock on wood, it looks like we're getting inching closer. Although the crypto community has been waiting for this for a long time, we'll get a Bitcoin ETF. It's a matter of when, not if. Now, once we get a Bitcoin ETF, does that mean all these other products are going to go by the wayside? Of course not. How many gold ETFs are there, right? Or precious metal ETFs? There's almost, there are dozens, if not more. And, there are thousands of cryptocurrencies. Not all of them will have an ETF, but, a Bitcoin ETF will be a really important moment in cryptocurrency and digital asset adoption. And I suspect it'll be, hopefully in a matter of months. There's no shortage of applications sitting in front of the SEC now. And it seems that, I don't know how many more questions they can ask, but, Van Eck, Wisdom Tree, and even folks like Fidelity, they are pushing forward. And at some point soon, we're going to have a Bitcoin ETF. And I assume that will be followed up maybe perhaps by an Ethereum ETF. I think once we get one approved, the floodgates will open for a variety of different digital asset ETFs. Now, you can also get cryptocurrency exposure sort of from, with a bit of arm's length. You can invest in companies that hold crypto on their balance sheet. And obviously, one of the most vocal ones is MicroStrategy, run by Michael Saylor. And they have an enormous amount of Bitcoin and have been a very vocal proponent of companies considering holding Bitcoin on the reserves on their balance sheet as either a good way of diversifying or as a way of hedging against the inflation risk. And of course, Tesla as well. I'm not going to get too much into Elon. I have a few AMAs that are on the Saron Funds YouTube channel if you ever want to hear me talk about Elon a little bit further. But, Tesla's another way of maybe getting a bit of Bitcoin exposure to a degree by investing in a company that holds Bitcoin currently on the balance sheet. You could also invest in companies that are enabling crypto transactions. So Coinbase, like I said before, is an exchange and it's publicly traded. But you have other companies like PayPal and Square that are providing, indirect or now kind of direct exposure to Bitcoin and other cryptocurrencies. Square now, has the ability. PayPal has the ability that you can invest in crypto right from PayPal, and that's huge, right? Because we talked about it in our previous sessions. Part of the way in which you value a cryptocurrency network is by the number of users, not so much the independent price action. Well, PayPal has 300 million users worldwide that are now going to have the ability to transact and operate and utilize select cryptocurrencies. So, that's one way to gain cryptocurrency exposures by looking for companies to invest in that are publicly traded that are enabling their users to use cryptocurrencies or to hold cryptocurrencies or to transact in cryptocurrencies. And I think Square is a really big one too. One of my beliefs is that greater cryptocurrency adoption is really going to start once it hits the merchants, right? And Square has spent the last couple of years really trying to disrupt the merchant service providers. And if it can be seamlessly introduced into Square, and at the merchant level, at your convenience store, at the local restaurant, that they can choose once they transact to move that into crypto, I think that's going to be huge. And I think that's really where the large scale adoption will come into play. And hopefully, at least in my opinion, really start to provide small businesses with a variety of different ways in which they can diversify and hedge against risk. You can also look at companies like AMC, right? And we're not going to talk about anything else with AMC, like in terms of Wall Street bets or anything. But AMC just announced not too long ago that they were going to accept Bitcoin. And recently they announced that they were going to accept Dogecoin as well. So start to look for publicly traded companies that are announcing or enabling the use of cryptocurrencies, especially the early ones. That would be a good way to get sort of an arm's length exposure to cryptocurrencies. Now, there's also the the picks and shovels component of it. If you can look to invest in cryptocurrency infrastructure, and there's a handful of publicly traded companies that are focused on Bitcoin mining, providing the machines, or providing building the mining operations themselves. Riot Blockchain is one. Marathon Patent Group is another. Canon is another. But those would be good ways to, if you want to take a picks and shovels approach, to look for folks that are, for companies that are investing in the cryptocurrency infrastructure. Now, there's one I didn't put on here, but one thing to consider too, as I said before, as some of you might know, cryptocurrencies utilize computing processing power. So I would look also as a possible consideration the producers of these, right? Whether it's an ASICs miner or anywhere else that produces processors, high-speed processors that could be used for validating transactions or mining itself. So those are some other ways in which you can look to gain sort of an arm's length and indirect exposure to cryptocurrencies beyond just either an exchange, a hedge fund, or by custodying it yourself, or by having your own personal account on on an exchange. Oh, good. I'm glad to see the answers to that poll, that people would like to see a Bitcoin or cryptocurrency ETF. I certainly would too. All right. So considerations when choosing an exchange. You're always going to need to do your due diligence, right? You do the same with a bank. You should do the same with a cryptocurrency exchange. Not all exchanges, they're not all created equal. And depending on the exchange, they're not all accessible to U.S. investors. There's whether it's futures or certain types of leverage that are not allowed here in the United States, or some aren't allowed in certain jurisdictions within the United States. So it's good and important to do your due diligence on this. So many major crypto exchanges are based here in the U.S. Coinbase, Kraken, Gemini, those are all here, based in the United States. Now, the world's largest exchange is Binance. Although they do have a U.S. subsidiary, they are, I believe, these days based out of Malta. But to use Binance, not the Binance U.S. affiliate, you can't be logging in from the United States. So it's kind of off limits to U.S. investors. And KuCoin is another big one, but they're based in Singapore. I think that for most people, it's probably your best bet to look for U.S.-based exchanges that have a track record and a history of longevity. You also want to look for KYC and AML processes. There's still a good number of folks in the crypto community that really shun or shy away from KYC and AML, and that's part of sort of like the origins of crypto and having complete decentralization and privacy. But there needs to be a balance too with security. We have laws and regulations here in the United States, and they're pretty clear when it comes to opening up a bank account, because there's money laundering that we want to prevent, there's crime that we want to prevent, there's fraud prevention. So understanding the KYC and AML process, if they have one, is really important in terms of considering which cryptocurrency exchanges you might want to look at. Regulation's coming, and that's not a bad thing. That's actually a good thing. Regulation is going and protecting consumer protection is going to make a majority of Americans feel much safer about investing in cryptocurrencies. So when you're looking at exchanges, you really want to take into consideration, the regulatory compliance, the history of regulatory compliance that exchange has. I can't say enough good things about Coinbase. They've got themselves on a publicly traded exchange, and they've been very diligent about trying to stay ahead of what they know are going to be the regulatory issues. But exchanges that are skirting around that, I would look to avoid. And it's pretty easy to check these things online, as well as when you go through the account opening process itself. Also, one thing you want to consider depends on kind of how wild you want to get. Not all cryptos are available on all exchanges. Some exchanges have different processes by which they'll accept a new exchange listing, and depending on the cryptocurrencies you want to invest in, you might want to take a look and see which exchanges that you're considering have different cryptos available to them. And when you do get on an exchange, depending on the sophistication of the exchange, Coinbase has two variants. Just to give you insight, Coinbase, your regular Coinbase, which is what most people who have a Coinbase account have. And they have a pro version, which allows you to trade with different trading pairs. So what I mean by that is it's not just you're buying a crypto or you're flipping one crypto for another. You're trading it against, if you want to buy Litecoin, you can trade Litecoin against the Bitcoin pair in some of the more sophisticated exchanges, or against Dogecoin. So you want to take a look. Most of these types of exchanges have either a Bitcoin pair or an Ethereum pair, as well as a US dollar pair. So that's one thing to consider as well. So let's talk about active versus passive management here for a moment. So this goes not only for your personal strategy, but for in terms of what types of products you might want to be looking for as well. So if you want my personal opinion, there is never been a better time or a better case for active management in an investment portfolio than with digital assets. The space is just moving too fast and too quickly. So it's active management is something that I really do believe folks should consider. Active management, the benefits to that, you get folks out there, depending on the product you're looking at, that have done a considerable amount of research and in-depth fundamental analysis on, the tokenomics or the team or the use case or the partnerships that a particular token or protocol might be trying to solve or be partnering with. It gives you a different type of exposure, maybe to other cryptocurrencies you might not have originally considered, and also provides you the ability to have your portfolio be able to, latch onto industry details or trends that might be missed in a passive strategy. Now, of course, the cons of this, if you're going to do this on your own, this is going to be very time intensive, which is, why we are, educating financial advisors so that they understand what their options are, because, there are thousands of cryptocurrencies, and just as time consuming as it would be for me to go try to stock pick, it would be even more to try to, pick, my top several hundred cryptocurrencies, if I was the casual investor. And it can be more costly as well. You're prone to make quick decisions, and sometimes you might get the FOMO. Fear of missing out might take over from what your original trading plan might have been. So we're all human, so that might be one thing to consider. From a personal investment standpoint, that you might want to be too active in your personal management. You don't want to day trade this all day. You want to look to a professional. And, at the end of this, 8-course session, you guys are on your pathway to becoming that and having an understanding, much more in depth than, perhaps your clients would be, so that you can help them and assist them with, discovering active managed strategies that would fit into what their criteria are. From a passive investing, and passive management, this is like, more of I guess sort of a longer term, if you want to try to be extra safe, buy and hold mindset. This might work well with some of the major, cryptocurrencies, but, you risk, you end up risking missing out on what is a very rapidly changing space. You're going to have lower transaction, costs, like I said, you're not dealing with the bank necessarily when you trade cryptos, but at the end of the day, every time you buy and sell anything, you're taking a little bit of slice off the top or the bottom, and you're going to have less trading activity, so you'll have less transactional costs, but you run the risk of missing out on important opportunities as the space develops. You might miss warning signs as well. If there are certain issues happening with a certain cryptocurrency, and it's just like the regular stock market, right? You want to be in tune to the news, so you don't want to just like pick only one stock and put all of your eggs in one basket. And because, like I said, the space is changing so rapidly, and because we believe that the digital asset universe is going to expand to a variety of different ways that affect American life and folks in finance at all levels, it does limit your investment universe and what is otherwise a really rapidly evolving space. So, with that gives you a good broad overview and an introduction to the basics of cryptocurrency investing. And I want to see, what our poll numbers come in on this poll that just got posted up. So if you guys could go ahead and answer those I want to talk a little bit and just give you guys just a little bit of insight into what we're going to be covering in the next session, because we're really going to go down the rabbit hole a little bit further in our next session, because it's really important for everybody to have a good understanding of investing in cryptocurrency in two parts. Fill in the gaps or get caught up to speed on some of the basics, right? How to have your own wallet, what a private key is, what a public key is, what's the difference between a hot wallet and a cold wallet, and what your options are with that, as well as your options for gaining cryptocurrency exposure beyond just having the crypto itself, with some of these other sort of arm's length options that I mentioned earlier, whether it's in the infrastructure or investing in companies that are transacting in cryptocurrency. But I do want to walk over before we get to our Q&A session and talk a little bit about some of the in-depth things that we're going to go over within the next session, just so you have an understanding of where we're going to be going from here. Now that everybody has, hopefully now remembered that never to share your private keys, and also avoid the paper wallets, we can talk about things a little bit more in depth here. So what we're going to talk about following this is we're going to talk about tokenization and securitization. We're going to talk about different ways in which investment vehicles are tokenizing themselves and tokenizing and allowing for fractionalized ownership through blockchain mechanics of their investment vehicles. So we might even talk about real estate investment trusts and a variety of different other ways. We're going to touch a little bit on NFTs. We're going to go into that a little bit further in our course load, talking about non-fungible tokens. But tokenization is a really important concept and sort of the second level of cryptocurrency investing. We're also going to talk about futures. We're going to talk about covered calls, and we're going to talk about a couple different ways in which institutions and digital asset investment professionals are utilizing, either through the CME, the Chicago Mercantile Exchange, or others, utilizing covered call strategies and taking volatility, which is typically seen as a detriment or a challenge to cryptocurrency investing, and using it as a feature, and using covered call strategies to help their clients derive monthly income, fulfilling their investment mandates for income generation. We're also going to talk about staking and staking rewards. And I guess the easiest way to think about this is, if you participate in staking rewards, this is like you're getting earned interest back, but it's not interest. It's you getting rewarded for participating in the consensus mechanism of the transaction. So we're going to talk about staking and staking rewards and what that all means, in different ways in which you can invest and earn crypto, and try to get your returns the way you want them, using the staking and staking rewards. We're also going to talk about liquidity pools and how cryptocurrencies are a very unique and efficient method of providing liquidity. And we're going to talk about liquidity mining. We're going to talk about yield farming and what that means. It doesn't mean anything with a pick and shovel or a pitchfork, but we're going to talk about ways in which you can participate in liquidity pools and yield farming pools in order to take the crypto you have and generate additional crypto, utilizing it by providing liquidity to different pools. And then we're going to talk about digital asset lending, and we're going to talk about how rehypothecation and digital asset-backed lending is very similar to maybe like what a Vanguard does now with traditional assets. So digital asset lending is a real thing. We're going to talk about the different ways in which that's done, and how in digital asset lending, how it really does open up the amount of interest back that the user can get from lending out their digital assets. So that's going to cover our session for session 4. So I wanted to kind of whet your appetite with that, because we went over a lot of the basics today, but we're going to get much more in depth on investing in cryptocurrency here in our follow-up session. So with that, I think we're just about at the 50-minute mark. I do want to take a look at the polling questions. Are you invested in cryptocurrencies? It looks like almost most of you are, a little bit more than most of you. But we want to get you all over that threshold. So with that, I'll take any additional questions here. I'm going to pop back over to the chat and welcome Dara back onto the program.
Great. Thanks, Jahan. That was phenomenal presentation. And really, I thought the part when you talked about some of the arm's length ways to gain exposure, some things I've never even thought of. I mean, that was really, really interesting.
Well, you know, it's funny, Dara. I was getting my hair cut a couple of weeks ago, and I was having to talk about crypto like I don't normally do. And the lady that was sitting in the waiting area chimed in. She told me that she would never invest in crypto, but she's definitely going to invest in PayPal. And I had to break the news to her. And she also was heavily invested in Twitter. I said, well, by default, you're kind of investing in crypto. And that kicked off an interesting conversation. But it's you know, there are a variety of different ways to get sort of that arm's length exposure beyond just having the digital assets themselves.
Right. No, that was really interesting. I mean, even the high-speed processors is something I never even thought about. So that was really interesting.
Yeah, I mean, there's an infrastructure to all this, right? And like that infrastructure has parts. So that's an interesting way of looking to get exposure by looking, okay, what parts and what are the machinery that need to be used in order to build the rest of this digital asset infrastructure.
And there are more public companies that are providing that infrastructure than we even realize. So that really is interesting. So we do have a bunch of questions. Want to jump into some of those. Let's start off with when you were talking before about the paper wallets. One question came in that said, could you have multi-paper wallets?
Yeah, you can. It's just that you'll have multiple wallets. You'll have multiple like pieces of paper. Each is its own individual wallet with its one address for that particular asset. And when you send it, you have to send all of it. So, you know, what I've seen happen is folks have a paper wallet, they keep it for a bit, and they say, oh, I want to bring this on somewhere else. And then they can bring all of that onto a wallet app or on their desktop wallet. But it has to go all in one shot. You can't send part of what you have on the paper wallet.
Interesting. And then you talked a little bit about mobile wallets, and then you had mentioned Metamask. Was that what you were referring to?
Yeah, that's one of them. That's an Ethereum-based wallet that has interconnectivity with a lot of NFT platforms. And it comes as an extension on Chrome or your Brave browser. And you can also have the app on your phone. And that allows you to swap for any what's called an ERC20 type token or ERC 721, any Ethereum-based token. So you can swap with that to other tokens, and you can transact with smart contracts like NFTs using a MetaMask wallet.
Interesting. And then we had another question that also came in with, how do you hold an NFT?
Like physically in your hand? Well, so this is what happens. So MetaMask in particular has their wallet split into two parts. All your tokens and then your NFTs live on your wallet. And you can sync that wallet up with an NFT marketplace if you ever want to like log into that NFT marketplace and see them viewable on your account, like OpenSea. OpenSea is the predominant NFT marketplace. You can sync your MetaMask wallet with OpenSea when you sign up for an OpenSea account, so you can view your NFTs right there on the OpenSea once you sync your wallet, or you can just right on your mobile wallet, see your NFTs. Now, I don't know if you guys are going to be able to see this, but I will show you. You have your wallet, and it's got to have a screen on one side of your NFTs, and I will show you. I have my NFTs right there on my wallet.
Interesting. So we had a couple of questions also now on ETF. So let's do some other initials here from NFT to ETFs. So on ETFs, let's start with, what do you find are some of the advantages of going with an ETF? And maybe you could even weigh in on, are there in the process of getting a qualification maybe on an ETF for a multiple coin, or is it just going for?
Well, that'll be the next step. I think the ETF just opens up greater access from tradability on like the NASDAQ. Right now you're really limited to either looking at like blockchain mining companies or looking at like the GBTC, but that's going to just open that up to your everyday investor that has a brokerage account. That now they can participate right from their brokerage account and have cryptocurrency exposure without having to go open up a separate wallet. But once the Bitcoin ETF gets approved, it'll be a waterfall. But that's going to be the first one.
Yeah. Can you talk a little bit about maybe some of the tax implications? We have some questions on that with respect to, whether, especially like Robinhood, for example, if you had mentioned before, if you're on Robinhood, you're not transferring a token or a cryptocurrency, but rather selling and then moving it. And can you talk
Yeah,
about
you're
maybe
selling it and then moving it into cash.
right?
So you're going to have a tax implication on the sale if you made a gain. Now, the good thing is about some of these reputable US-based exchanges is that your tax paperwork is prepared for you effectively. They're going to kick out those forms that you can download. But with Robinhood, because you're not holding the crypto, in order to do anything with those funds, you have to then sell them, and now it's cash again. And then you have to send the cash. So, and you're not going to be able to send that cash anywhere other than the bank account that you deposited money into your Robinhood account from. So it's a bit limiting with that. Now, that's what's sort of like my love and hate with Robinhood is I felt it really exposed people to crypto in a new way, but not fully.
Interesting. And then you had also mentioned before AMC. So if someone's purchasing, movie tickets and using cryptocurrencies, how about the tax implications of that?
So like depending on the wallet that you're transacting with, this is why I love Coinbase. They're gonna keep all those records. You'll be able to download those. So like if you transact out of your Coinbase wallet to buy an AMC movie ticket, right? They're keeping track of that. And there's a variety of software that's being developed and that is already in place that keeps track of that for tax implications.
And I would say, someone said to be one of the comments here that some people will be surprised with tax requirements when it comes to the IRS tracing crypto transactions, and I think one thing to be mindful of, there are bills out there or have been, I need to check on where they are now, but there's been some legislation out there that would be talking about ways we could exempt certain smaller transactions under a certain amount from those tax implications. We have some more questions regarding some storage.
Yeah, I see them right here on the cold storage. So let me answer them here because I've been chomping at the bit for them because these are good questions that I wanted to answer for you guys. So yes, cold storage wallet, keep it in a fireproof safe. All right. This is why, going with like a, insured and like publicly traded place like Coinbase, like if something happens to your Coinbase account, they're going to make you whole. Right. But, cold storage wallet, you need to keep it safe, physically safe, or else you're going to lose your private keys. Now, Arculus has a way of, the way their encryption works, and I can't really explain very easily. You'll have to go to getarculus, I think it's .co, to find out. But they do have some safety mechanisms in place as if you would lose your credit card. But like, any other type of like, one of the storage devices, yeah, you need to keep that somewhere, safe, that, it's not going to get destroyed in a fire. And in terms of like the Trezor, I have a Trezor. You mentioned the Trezor L was a difference. Does it matter if you have an older wallet? Functionality and the interoperability. I think the Trezor L has a additional like app capability. I don't use that. I use the Nano. But that's another thing to consider too. Is technology is consistently advancing, so there might be times where you need to upgrade your cold storage wallet. As you did when you got a DVDs from your VHS.
Right.
So that's one thing to consider with that as well. And no, I don't have two Cool Cat NFTs. Those are Crypto Mutts by Kenny Shader, who is a contemporary artist in Miami.
Right. Well, Jahan, this was really incredible. Really excited about it. I'm excited for session 4. This was really a great discussion. I'm excited.
Oh, I am too. Yeah, we're gonna have some other folks on session 4 besides just me that can really talk in depth on like the covered calls and yield farming and crypto lending, which is I think awesome and really opens up a variety of different benefits for the individual investor. So I'm really excited for session 4, and I'm thrilled that you guys here joined me here today on session 3.
Thank you again, Jahan. Thank you everyone for attending. We'll have some emails out to you later today with links to session 4, also with links to the recording of this session, as well as sessions 1 and 2. If you missed that and want to go rewatch. And feel free to reach out any questions. This is really exciting time. And Jahan, thank you so much for putting together this course, because this is really exciting, and I'm looking forward to learning more about that as well.
Well, thank you, and thank you for everybody for joining. And I can't wait to see you next time around. So please don't forget to register, and you can go to the D Wealth Education page to get caught up if you missed the first couple sessions.
Thanks, everyone.